Crispus, it's always great having you, but it's not a good day on the NSC.
Yeah, it is really not a good day, Lerato. We are down 113 points. I don't know, and going forward, it looks like things can only get worse. Though my feeling is that, my gut feeling is that we've reached the trough. From here, I think as we go forward, I saw a lot of demand later on during the trading hours, and I just pray, it's my prayer that we might be seeing the market coming up again in the coming week.
You know, Crispus, here's the discrepancy. I mean, this market by late last year was in the 4,600 level. It was looking really good, offering very good returns. Now you're saying we're at the bottom of the trough, but results have been pretty good. Dividends have been decent, but that's not enough to stimulate more activity and a buy-up. Why is that?
Lerato, we look at the top-down approach. I mean, we look at the political crisis hanging down us. It's like a sword of Damocles. We've got the Hague trials. I mean, we've got all these headlines. They're not making for good reading. Inflation up 6.4%, the highest in the last 1 year. Middle East crisis. Really, Lerato, all these things don't make for good reading. That's why I would say that we're having such a scenario. Though for the industries, they performed well last year. But in this coming year, will they perform well? That is a question.
All right, let's talk about what we're likely to see on the bond markets and the fixed income sector. The response to the weekly auction of 91-day Treasury bills, what's that telling you?
We are likely to see the central bank coming in to try and curb in the excess cash. Because the feeling is that there's a lot of liquidity in the economy. So with all these issues, I think it's an attempt by the central bank to really come in and take charge of the take charge of the economy. I mean, take charge of the cash in the economy.
I mean, I'm just talking about yield curves here as well, Crispus. I mean, obviously investors holding back a little bit, but this is one way of testing investor sentiment about all the broader management of the Kenyan economy, a weakening shilling, rising inflation. How is that going to impact on investment sentiment as demonstrated by bonds?
For the bond market, funny enough, it's also been a bit quiet. We've seen the 30-year bond it's being a benchmark for the 30-year. We expect to see a lot of volatility on the short-term interest rates. I mean, on the short-term instruments, that is the 5-year, the 2-year. But on the longer term instruments, I expect the yield to be steady. Again, yes, you're right. The yields are likely to affect investor sentiment, yeah, I believe they will affect a lot of investor sentiment.
I mean, you mentioned the 30-year bond, the Savings and Development Bond, recently launched by the CBK. It's interesting that they're looking for a second phase. Why is that? When people went for the first auction, investors, the money that was returned was, I think, about 15 billion. I think the sentiment out there is that there are a lot of people who didn't get it, and they might want to come in a second time. And also remember, this bond was supposed to actually open up the retail segment, and most of them bidded, the bids that they had quoted were either far below or far above what the average yield. So the government the CBK returned a lot of that money, and it is their feeling that they would like to get it back for the people who missed out on the first round. Let's look at the results that have been coming through, because Kenya has been quite prolific in the release. Diamond Bank sees pre-tax profits up 80%. Their assets have proven to be quite profitable. What else is working in their favor, do you think?
Quite impressive results from Diamond Trust. 81%, I believe it's one of the highest in the banking sector. For Diamond Trust, they've really built in a niche market of asset finance. That really worked into their favor. And then again, as we all know, asset finance, the risk is minimal as considered to other forms of lending, like personal lending, which I believe, in my view, is a bit high. So the niche market really worked for them. Another thing is the massive branch expansion. They're targeting to open around 100 branches in East Africa, in East Africa in the coming year. So that also will work in their favor. Worked in their favor in the last financial year, and it also work in their favor in the coming year.
Well, obviously now the good results has prompted the board to go back to shareholders and recommend to them a bonus share issue of about 20%. What's the likely response? The bonus issue is a good idea because, again, remember, banks are supposed to raise their capitalization to 1 billion. I believe that that is an attempt to keep the capital inside, instead of giving out to the investors, to their shareholders. The bonus issue is a good idea because, again, as an expanding bank, they really don't have so much avenue. They really don't have so much room to maneuver. They need the cash. Yeah. So the only way out is to give out the bonus.
All right. CIC Insurance also full-year profits that have doubled. What do you make of CIC?
Also, again, CIC Insurance, we had 500 million profit before tax. Very, very impressive results for the insurance sector, for CIC and the insurance sector in general. Basically, it's been a good year for the insurance sector. We expect, we look at Pan-Africa, and we look at Pan-Africa, which is the listed one, and then CIC, which is aiming for listing in the coming years. Then again, they had a very good operating environment. Going forward, we expect the same thing to happen. Because, again, Lerato, Kenyans are not really that much insured. There's high opportunity for growth. If you get in the right products, I believe they're on the right track.
Well, obviously, so CIC is giving us a sense of how the insurers are performing. The banks, we know, we were expecting exponential growth. But here's the interesting facet. Co-op Bank, that stock has plummeted something like 15%, despite a decent set of results. It seems as though investors don't feel that their results were decent enough. Why is that?
The stock has come down in line with the whole of the market. Again, there's a sentiment that once Barclays Bank released their results, we were shocked. We saw a jump, and I think at some point I started to see that the results were actually those prices were actually a reflection of the results. I mean, investors started expecting the results, and then again we had we had the whole market coming down. I mean, it's sinking. It's a sinking ship. It will go down with all the sailors.